The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon till 1 p.m. Of course, we weren't here yesterday. Dow is down 600 at 24,431. So what I said to subscribers to my opening call, and of course I did my webinar on Tuesday night, and I showed that there are levels that we've got to watch really closely. The first level for the Dow was the 24,000, this rising trend line, 24,300, and then 24,122 would be the left side low. Why did I say that? Because there's a particular pattern that we look at, the lowercase h, that can then go to a lowercase m. That my feeling was that we were now in the M formation, the second arch formation, and that we should at least test the gap, that big gap up that occurred on the 28th, where the Dow opened at 24,832, when the previous day it closed at 24,748. And what I discussed was, in the midterms, there was that big spike to 26,277. It was a two-day spike, and that here we matched very much a news-related, really an opportunity for longs to jump in and for shorts to have to cover. And we got this little doji candle. And on Tuesday, the market opens down straight away and just plunges right through all the key important support areas, but stops where? Stops dead right on this orange line, this 200-period exponential moving average. And today we gap down again and go right to where? To this rising. And I said to my opening call subscribers this morning, this rising trend line is going to be really important. And the low today is 24,242. The low and the trend line itself was at about 24,330. So we went just a little below. We're now above. Now, let me just have a look here on the very short term. I was asked about that. We'll look at that. So on the very short term, we've gone in the E-mini December down to 2621. Even just a couple of hours ago, it was at 2670. I mean, the speed with which we're moving now is really very, very quick. Number one. Number two is, in order to get positions, it's not even as if you can get a position at the close thinking you're going to reverse back up. And even though I had a huge trend gauge reading on a Tuesday, which suggested that there should be some 9 to 11 point rally in the E-minis, which there was. Well, what's the big deal when you're down 90? This is a little unusual in that the preparation for the entries and exits has to be done either pre-market or intra-market, and not always right at the open, because the opening has been a little deceptive on both the upside and the downside. So with that said, let me just go to the numbers here. You've got the second arch formation. I think that most of the damage has been done today. I love when there's a very sharp pullback and then there's a rally that looks like, oh, this is it. And then the low that was made intraday is taken out. And then everyone just absolutely throws up their hands and says, oh, no. There's a big difference, though. The tide has changed. What do I mean by that? If you look at these rectangles here, that I drew them in quite some time ago, and I said there's a really good chance we're going to get the arch formation in the Dow that was the January high down to the February low, big sharp rally from 26,616 down to 23,360, big rally to 25,800, comes way back down, and then what does it do? It breaks the left side low in the H pattern. Well, this time we've been holding, even today, we've just barely, but we've done it, this weekly trend line, just really kind of nicked it by a fraction. Now we are a little bit above it. This second rectangle pattern, that's what I've been looking at. And to me, this is really important stuff. I wonder if I can do it here. In the E-mini, yep, there it is in the E-mini. And the E-mini shows the same thing. There was a trend line break this morning, and now we're a little bit above it. Here's the trend line. It was different to the Dow because each individual index is having a different chart formation, and the S&P is a little bit different to the Dow in that where we are right now is at that trend line support, but this morning it already went down to a trough D, to a leg D, I should say, in the daily chart. And this is an inside leg. How do I explain? It's an inside leg D from the low that was made at a peak F/C way back at 2603, and that was, I think, the 29th or so of November. All right, here we go. So let's go through the numbers. SPX.X. Now, I'm talking about these in relation to chart formations. I'm going to be talking about that a week from tomorrow. Is my all-day webinar, a two-part webinar going from 9 to 12 in the morning, discussing techniques, discussing patterns, practicing those patterns, and then trying to put it into action in the afternoon from 1 o'clock to 4, and then 4 to 4:30 we have a recap. We look at what to prepare for the following Monday. I'm not going to spend that much time on the actual Chapman wave notation. I will give you as much, I will send out as much information as I can, and it'll be an ongoing thing. You can ask me about it all the time, but it's these patterns. Look, this lowercase h that goes to lowercase m. Is there anything more beautiful than that? I mean, look at this. Same thing here in the weekly of the S&P. So the S&P is down 56 at 2643, having hit 2621. Running a little bit now off the low. Actually, I wouldn't say a little bit. The S&P is running quite nicely off the low. Let's see what the QQQ series is doing, the NDX 100 trading vehicle. It didn't even get close to the 157.13 low of the, I think it was the 19th or 20th. So this is actually not bad action. And the weekly chart is way much better, but the monthly chart is much worse than the Dow and the S&P. That's why November was important, as we discussed in the webinar. I went through these different charts, but December's close is going to be really important because that will be the third month after the October 187.53 peak F high. And the peak F high in a monthly chart, usually you take quite a bit of time to resolve that. Let's go to the IWM, which has been the worst performer for a while. It's down 1.55, Dow's down 2.45, S&P's minus 2.13%. So the IWM at 145 is down 2.34, and it's taken out not only the left side low of just the 20th of November, it took out the 26th of October low of 144.70. Today's low is 143.43. Wow, leg C in the weekly chart, monthly chart is in the sell mode. I've got a hat-trick top here. It says that the IWM is not coming back all that quickly. Just got to be real careful. Yep, we could start to form a base because we're almost at that big major trend line, that green dash line. Gold was down, now it's up, now it's down. It's at 1246, leg D in the daily chart, but leg D so far is not taking out the high in the continuous contract of the 26th of October, 1252.5. The high today is 1249.9. It's good that that gold is holding here. I've been talking about this. I mentioned this both in my newsletter all the time and on the webinar that's still there. It's an active webinar. You can go to it anytime if you sign up for a subscription to my opening call. That's right there to study. I think it's worth it. The silver is down a fraction. Not a good chart. This is the dollar. The dollar's holding very well. I'll be back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, just because I have a webinar coming up in a week from Friday, and it's an all-day one, it's about the Chapman wave. It's just really a very, very pragmatic. I want people to come in and come out saying, wow, I practiced it live. I'm able to do this over and over again. I drew this a moment ago while this was before we came on the air. It was live in the den, and I showed that there was a trough G in the 2-minute chart of the E-mini. I showed that there was I put in an up arrow because it made a B, and I showed that it should go to a C. It went to the C, and then I drew in, before it happened, I drew in a cup formation, and I drew a little circle above it at about 2650. And that should have been where I was anticipating leg D would come in, and I said it should occur fairly shortly. And what happens is, boom, it spikes up. Where does it stop? It stops right on this moving average right here at 2652. I think that's 0.50. Let me just double check. Two double tops at 2652.50. Yep. And it goes to leg D. And there are techniques that are involved, and this is what I'm going to be teaching. Entries and exits. This is D. This is where you expect to go to. You expect this trend line to be hit. Your MACD is still strong. Stochastics improving. What do you do here? That's the exit. How do you exit? Do you want to take something off and leave the rest? Well, you want to be looking at the next time. Let's just say this was not a 2-minute, it was a daily. Let's just say the next one over here is not a 5-minute, but a weekly. And this one on the right here is a monthly. All right, just longer term. And what we've got is a leg B. And what are we looking at here? We're looking at the arch formation in the 10-minute chart that went to peak D, and then a rogue wave. Just as a news-related event at the opening, spikes to this A minus and then fails and then comes back down. What are these moving averages here? How important are they? Why is this a leg B now in the 10-minute chart? What does it mean? Does that mean that we should go to a C and a D? What do you look for to tell you that longer term you can go from one time frame to the next, and all of a sudden what you've got is you're holding a position longer than you would. What's telling me right now that you've got to be careful at D, and that's the reason why at D you want to start doing some money management. Take something off, you can leave the rest with a stop. The stop should be a little bit under the key support levels, depends where you got in, but probably underneath this peak C pullback. These are things we're going to be discussing. Very pragmatic. Nothing here. I don't want to say anything is guesswork, because, of course, anything in the market is guesswork, because you have to put your analysis together with the type of action that's prevailing at that particular time. What techniques do you want? I used to call it my Sears and Roebuck huge toolbox. Well, of course, Sears and Roebuck disappeared, became Sears Holdings. Sears Holdings, that guy Lambert, whatever his name is, I yelled and screamed for years saying, get that guy out of there. He's trying to ruin the place. And he took Sears to the absolute gutter. I can't believe he was so, everybody kept saying, these are brilliant guys. Brilliant? Boy, that really was brilliant, right? Taking a 100-year-old company or something like that, turning into dirt. Okay, let's see. We want to go on and we want to look at TLT. The TLT right now screamed from the 111.90 low on the 2nd of November. And the MACD was good. It rebounded. The stochastic started to rally. And what did it do? It went to peak A, peak B, peak C, peak D. The Chapman wave methodology. D, the fourth highest peak, uppercase D, is where other things can happen. And we'll see whether or not I'm right about that little holding pattern in the 2-minute chart in a little while. But in the meantime, it goes to D, pulls back. But look, I'm going to teach this. That MACD green line is still strong. The histogram, the vertical lines are still strong. The stochastic only pulled back a little bit. It held these 2 moving average support levels and kaboom! It spirals where? Right through the 200-period moving average and goes today to 119.20 in leg E. Leg E, and still holding very well, I should add. So what does it mean? We look at the new time frame, the weekly chart. This is a leg B. The other leg B became a B minus in that arch formation. Remember, we're always looking at these patterns. And what happens? It pulls back to a trough F. The MACD turns around, the stochastic turns around, and they are now positive, but the price movement is a little too much. And that says to me, we're probably getting quite close in the market to another. I don't think this is crash material. I think just lower lows and lower highs and really strong fake outs to the upside in the general market, and then bad news comes in again. I think that's the phase we're in. And let's go to the monthly chart. Horrible monthly chart up until 2 weeks ago. Now it's starting to improve in the bonds. But my longer term outlook says bonds are probably, yields are probably trading now in some fairly, within a range, and that's really important. Finally, you got some pullback. What's the HGX doing? I haven't looked at that today. That's the Philadelphia Housing Index. Up 2.57, but it made a peak D. Chapman wave peak D. Watch out for those Ds. Pulls back sharply. The technicals are still pretty good. So I'm going to be watching this very closely for subscribers, because I spoke about this the other day and I said we're looking for a rotation into different sectors, and we'll see where the rates can actually help the housing sector. All right, let's go back to crude oil. And then I had a couple of questions about oil service stocks. Crude oil right now is down 2.02 at 51.23. Has a little bit of a rally and then pulls back sharply today, but it didn't take out the low of 7 days ago of 49.41 in the crude oil contract. This is a continuous contract. I know people actually trade other things, but I'm just looking at this as information for me. I never trade crude oil. So it's fine for me, the crude oil chart. And what we're looking at is a doji. Finally, after 8 horrible, horrible sessions, you get a little doji candle from last week. This week, a little bit of a help. I think crude oil is about to help to bounce a little bit more, but all within a range. I don't think it's taking off, but I don't see any reason why the 49 should be very strong support, maybe 48.50. But there's a good chance that we can try for 55 to 56 with some kind of news. Quick question I have here is, it wasn't a quick question, it was a question. Rig, what was the question itself? Rig. There we go. Will you just abandon ship on rig or wait for a bounce to abandon? So here's the really big thing. if you look at the chart patterns that we discuss all the time in this particular hour, the arch formation, the dreaded H formation, the lowercase h that goes to an M, and if you look at the cup formation or the V-shape formation, these things repeat over and over. Within that, I developed years ago a technique that I call the plumb line. And what that does, sometimes it doesn't work exactly. It's a moving plumb line, but sometimes it gives you just the most perfect left side, right side number of bars that are the equivalent in time from a low that goes to a high, makes an arch and then comes back down, or a high that goes to a low and comes back to the high and makes the same number of bars. I call it the Chapman wave left side, right side price time match. We just did that with rig, except it went right through the support on the left side, and it's at 844 right now. I'll talk about that, and let's have a glance to see if we've got the next leg up in the 5 minute.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
If you don't mind, I really have to keep going to this because this is the only way you're going to be able to tell. I mean, word of mouth is one thing, but this is the real live thing. Look, so let's say you had a couple of contracts here in the 2-minute chart. So you take something off, it held the 9-period moving average, and then it broke out and went to leg E. Well, that extended leg B. Well, it turns out that the plus arrow in the 5-minute chart has gone to an up arrow. Anything can happen in this market because it's got the vulnerability of fund managers being nervous out of their skulls. I know that for a fact. I've spoken to a couple of people. They don't know what's going on right now. So we could pull back sharper, but on a purely technical basis, the E-mini on the 5-minute chart has gone to leg B, and the stochastic is very strong at 94%. The MACD is expanding, and now you've got a moving average above it it should start to act like a magnet. So maybe another couple of minutes to have a bar that makes a peak B instead of a leg B, and then attempt. And that means that at 2657 right now, 2657 is 36 points off the low, and we're talking about minutes. So this is going to be very important. Why? Because the 5-minute chart, let's think of this as maybe a daily, this is a 120-minute chart, daily and weekly. So that has already gone to a buy mode in the Chapman wave. That suggests that if everything works out fine, it should still go to a leg C and then a peak C, and then a leg D and a peak D. And then the 5-minute chart, the 10-minute chart, which let's call it the weekly chart, is still only in an up leg. It's got a buy signal, but no buy mode. It says you don't know yet whether it's going to go to a leg C and a D, but you need the help of the 5-minute, the 2-minute, and the 5-minute. You need the help of the 120, and you need the help of the daily, and then the weekly kicks in. So we've just extended this leg up in the 2-minute chart. That in fact goes to an F/B. Why? Because it happens so quickly and so powerfully, and the technicals are so strong that it might have recycled in the Chapman wave, instant restart, 3 bars, and it breaks up above D. So we were watching this. I'm going to call it right now F/B, because I don't yet have a signal to say it's down. It should drop sharply. F/B. Let's see what happens here. And B is going to extend it here in the 5-minute. Boy, if you're watching this live, this is fun. This is like watching a show. All right. So let's go back to our story. So ring. So it goes back and now has undercut the low that was made back the week of the 9th of February. It went to 870. And then it rallied strongly to 14.50, 14.34, peak E, pulls back very sharply, and then it has a technique that I will discuss in more detail Friday, a week from now. But this is called the Chapman wave rogue wave. Goes to a peak F just slightly above. I love this. I'm going to talk about this right now. There's a technique that I developed in the Chapman wave a long time ago, and it's called the rogue wave. And in my CD introducing the Chapman wave methodology, only available at TFNN, I talk about this. It's a CD book. I talk about it as why it's a rogue wave is if you go to the beach and there's a sign at the beach that says high tide at noon. So you get there 10 minutes to 12, you think, great, I'm going to go to my favorite rock, sit at the edge of my rock, tide's going down, I can sit there safely. You sit there, you put out all this, you spread your stuff, you take your towel, you rub that suntan lotion on, you got your dark glasses on, you got your little pea cap on, you're sitting, you're just about to sit down, and you got your food all ready, of course, everything's there. And then, splash, there's this one wave. It's 12:05, and this one wave goes right up the beach and then starts to go. By the time you look around, the tide is going out. You say, what happened? That's a rogue wave. Why? Because it had already given cell signals in all the different areas. The MACD, the stochastic, everything was in a cell signal. And then it has this sudden move to the upside without the veracity of the other technical tools confirming, and then it goes just fractionally above. Think of this now not as a weekly chart, think of it almost like a daily chart or a couple of minute chart, right? So all of a sudden you're short and looking great, and then what does it do? It takes out the high that was made at $14.34. So there are those couple of minutes and you say, oh, I know, I got to cover. I knew I should have held that. It was looking so great. Why did I switch to short? And you do that. And this is the irony of this particular move. What happens is, in the time that you're making your decision to go back to long, or the time that the longs that got out say, oh, I knew I should have held it, I'm going back in, because it's way above that not way above, it's above the previous high. That bar turns around and whips you and flies to the downside, goes back to the trend that it was following. That's a rogue wave. It just takes you by surprise. It forces you, if you aren't thinking correctly, to do everything wrong. And then it goes back to where, oh, nothing to see here, folks, just going back down. And look at this. Now it's done the same thing on the downside. It's done the arch formation. It's taken out the left side low. Now, the rule of thumb in the Chapman methodology is that within 2 bars, it needs to close above 8.70, the low that was made on the week of the 9th of February. And then it can rally to the next moving average or peak of significance. In this case, even the moving average of 10.16 is huge, huge support. I mean, huge percentage. So now the question is, what do you do? Well, I say if you've been in this long, 2 points is not going to make much of a difference. So I don't think at an 8.49 with, I'm sure there's going to be some mention about oil at this particular level. I just don't see why not. The oil contract is saying there should be a bit of a bounce. But I am saying to you that if you were in higher up, or if you've been in for a long time and you've had that whole round trip between, say, the 9s and 10s, going all the way to the 14s, and now it's at 8, 2 points is not going to make much of a difference if this thing's going down even more and there's a peak in the monthly chart. So I don't want to now become the owner of your problem. I'm sorry. I'm going to make a suggestion, but it's a suggestion that would say to me, would I buy it now or would I sell it? That's the way I want to look at it. My answer immediately is, you've just made an H pattern that has the potential to be a failure pattern. So I would definitely not do anything other than nibble right here as an experiment to see if the, and I look at others at the same time, if there is a move, it has to be so quick, it has to be within 2 bars, that's 2 days, that's Friday and Monday. If the low of today of $8.36 is taken out, that's 11 cents, 12 cents, I just wouldn't even want to own this. And I'm going to say to you, I would nibble on it if I was not in it, only because it's made the arch formation, and this is where other things can happen. And I'm saying that this is where it can have a bounce. I can't expect the bounce to be more than 931, the 9-period moving average. Maybe 948, the 14-period moving average. I don't see it taking out the high of the 4th. That was at 10.03, unless it has a lot more work to do. So I'm just saying to you, be careful, because this is a rig we're looking at. This is Transocean, a limited trading at 847, down 85 cents on the day. And yesterday it hit, I mean, this is huge, 10.03. I'd probably actually not do anything myself, but if I was to do anything, I'd nibble at it. Now, if you're in for the longer term, I'm going to take a moment and talk about it when I get back, because there are things happening here that you need to be aware of. And I have to look at it in a longer term picture, and we'll look at that in the month. And the monthly actually has a whole series of arch formations.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, so we're back. So we're looking at rig in the weekly chart. This is Transocean Limited, trading $8.47. It makes a low back in February of 2016. It makes a low of 767. It rallies to the 16s. Peak D, it pulls back. Peak D is at around about 1280. Pulls back sharply to about 850, and then it goes all the way up to this peak E that was made on the week of the 16th of December of 2016, comes down. So if you look at this as a time lapse and you draw to the right side, it takes you into the first week of February, right? And there's a downtrend line that this seems to be the character. I love looking at a stock and say, what's the character of this particular thing? And look, if you put these two arches together, where the first one went to a peak D and pulled back, and then it went to soaring up to a leg E back in 2016, it comes down to a low in 2017 to $7.20 the week of the 18th of August, has a rally to a peak D, pulls back, and then does the same thing. It rallies again sharply, not as sharp as before. This time the rallies to the 14 level. So I'm saying this is making a pattern that is very familiar now, and it keeps coming back down. So this says to me that there's a really good chance that it could go to test the low 8s. It has to rally really quickly. And therefore, if you're in for the longer term and you're prepared to hold and say, you know what, I've sat through, I don't know what you're in at, but let's just say you're in at 11.5, right? Well, 3 points, that's big. So now, of course, a lot of people say, I don't want to take a loss now because it's going to come back or I'll get back. I always say, just cut your losses as quick as you can. You can always get back in. That's why this year we've had a pretty good year, because we've taken profits on the way up or the way down. And then we got stopped out, and whatever we got stopped out for, at least we're making money. And I was playing it as conservative as I could because of our subscribers. I know people go off to work, they can't keep watching. So that's different. But if you have a stock and you have a portfolio that overall is doing very well, and you like the oil service area, then I'm going to say to you, here is, and I would not have had it as a desire that I want you to average down. So all I'm saying to you is I wouldn't add to the position at all. I'd have to have the patience say, get back close to what I have so I can get at least to even, and then I can make a decision. But what I am going to say to you is the next 3 days are really important. And yet now I can go back to the daily, and I'll tell you why. Because if through tomorrow it does not close above that 720 level, it's sorry, not 720, the low on the left side was 874 level, you've only got until Monday. And if we can't do it by Monday, then it means that it's going to have some really surprising and great news to accelerate to the upside. Okay, let's go to Stan in Atlanta. Stan, how are you?
Very well, thank you. While you're talking about oil, I just picked up Marathon today when the market turned at 1567. It's moving up, but what do you think of it?
Okay, so we've got almost the same chart formation. In fact, that this monthly chart is a little bit better. We've got Marathon Oil, MRO, trading at 15.79, is down $1.03. Now, yours, the low that was made, this little doji candle on the 23rd of November at 15.49, today's low is 15.60. So far, that's a good sign. I wish that Rig had done that. So you got in at what price?
1567.
Okay. Let me think.
1579 now.
Okay. I think that, so that's kind of what I was saying before, that if I was looking at it fresh, if I was going to, if I liked the whole sector and thought, hey, they're ready for at least a, a bounce, then this is where I would start the position. You've just done that. So, and yours is a little bit better because it didn't make that left side low. Day's young, but so far it hasn't. I don't like the fact that it actually had like an island reversal to the downside today. So I'm just, I don't know, what was your plan? Do you have a stop yet, or were you thinking get in and now you can start to organize? What was your plan?
I just saw the market turn. You know, it was down in the 600s, and the market turned, and the oil turned also. I was watching crude, and it's had a couple of good bounces today. So I'm just day trading this. I might hang on to it for a while, but we'll see.
So, Stan, if you're day trading and it closes towards the high, do you intend to keep it?
It depends on how fast it moves. It's moving up at a pretty good clip right now. It's
1585, right. So now let me go.
I'll decide later.
Okay, so the 120-minute chart says it still needs quite a bit of work, but I'm going to go to the very short term. Let's just go right here, and we'll go. So, folks, we're about to go to a leg C in that 5-minute chart, and still a leg B in the 10-minute chart. Hey, I like this action very much. I'm going to go to MRO. We'll do the same thing. So the 2-minute chart is the one that you're watching. The 2-minute chart needs to take out the high that was made at 12:36 this morning, 1588. If it can do that, it has an inside buy signal that hasn't gone to a buy mode in the 5-minute chart. And then, okay, this is nice. What we're looking at is 1597 today. Today's previous high, and then it took a bit of a dive. So I'm going to say to you, it's acting very well, nice. This is nice action. This is what you really want to see. I agree with you. You need speed. I'm not sure if the whole sector is going to have the same kind of speed. I think crude oil, you're right, crude oil actually needs to go a little higher. They don't go 100% together, but they pretty much, they need crude oil just to have some kind of positivity here. So I like what you did. I'm going to say to you, I don't normally do this, but if this closes at the high, what I would suggest to you is think, you don't have to do it, but I'm just saying, think about taking off some to reward yourself for a great day trade, and maybe keep a little bit overnight if you're prepared that you might give back that profit, because you never know, right? Anything can happen overnight. I don't know if you're even interested in going overnight, but if it closes at the high and that high is above the high that was made at 12:36 this morning Eastern time, if it's a 1588, if it can close, I'd make it 1592. If it can close above 1592, I'd be raising, if you're watching it all day, I'd be raising my stop on my trading position. And as it closes, just about as it's closing, I'd take whatever you think you're comfortable with, and I'd leave a little bit, because if this gaps up tomorrow, not only would it be good for the market, it'd probably be good for the oil service stocks as well. So that would be, now stop, as far as I'm concerned, I don't know what you've got as a stop intraday, but now you've got a little bit of a profit. I don't know if you want to feel like you don't want to give any of your profit away, because if it goes underneath, let's say 1570, if it goes underneath 1572, 1570 at any point from here, that says probably it's not going to close all that well. So
right, I usually set a stop in to protect a $100 gain, just for principles.
So this is really nice stuff. Hey, did you do this? You did this before I started discussing rig, right?
Yes.
Wonderful. That fitted exactly the thinking that I wanted to do with a rig. Hey, congratulations, and let's see how it is. I'll follow it up tomorrow again. Good luck.
Okay, thank you.
Thank you. We'll be back with Jerry in the Back Bay straight after this. We'll be looking at Boeing. Oh, I haven't looked at Boeing today. I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's at 454. S&P's 39 lower.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So we're in leg C of that 5-minute chart, and now leg B, and that's got an up arrow because it's now in a buy mode. That's what we're going to learn. 1 week from today, go to the front page of TFN, check it out. Let's go over to, we got Jerry in the Back Bay. Jerry, how are you? Back Bay, Boston.
All right. How are you?
Very well.
Yeah, I'm interested in Boeing. The chief executive officer, the head of the company, was just on, and I think I've always thought this had a really good fundamental situation, but was overvalued. And now it's at the bottom of this range, and they have like a 5-year backlog, and I just think it seems like it might be finally an interesting entry point for Boeing.
So as far as I'm concerned, I've heard different reports. There was one person I heard saying they've got like a 20-year backlog because of the amount of work that they can do and what the orders are. So it doesn't matter. They've got a fabulous backdrop. As far as their finances are concerned, it's the ongoing cost, it's the other aspects that I'm worried about. It seems to me that there's going to be a better buying opportunity in Boeing. It's trading down 13 points right now at 329. If you look at my monthly chart, the candle that was made last month has a wick, and it's already been into that wick but it's bouncing above it. I suspect that over a 2-month period, there'll be a period where you'll be able to buy Boeing. Probably it's a 329 right now. I think at 278 to 265. Now that sounds crazy, but I think that that's still a very big possibility. So I'm going to say to you, if you're interested in buying it as a long-term position, so I would think maybe scaling in is one way to do it. But if you don't mind, I want to see where it closes today and where it opens tomorrow. It could bounce a little bit, and I'll do it on my show tomorrow. Maybe if we can follow, because it's such a short time right now, maybe tomorrow I can spend a little more time on Boeing. I know quite a number of people have asked me about Boeing and Goldman Sachs. Maybe tomorrow we'll spend a little time doing that. Do you mind?
All right, thank you.
Okay, thank you, Jerry. I'll be talking about Boeing tomorrow and Goldman Sachs. That's 1 week from my one-day, 2-part webinar, all-day webinar, just discussing exactly what you saw me do live, why I'm doing it, what you do, what you look for, and entries and exits. Stay tuned for Steve, stay tuned for Dave, and Tom O'Brien.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.